You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO, This Week in Futures Options, the program where the name says it all. We break down the week that was and indeed still is from a futures options perspective. What's going to make it on the show? We got to tune in every week to find out. Is it going to be ags? Is it going to be metals, equities, energy rates? You never know. You got to tune in each week to find out. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever compelling, at least we tend to think so, Options Insider Radio Network. Reminding you, of course, if you like what you hear, you're one of our legion of on-demand listeners, keep rating and reviewing. It really does help the new folks continue to discover this program. Every month this year has been a new record in the 15-plus year history of the network. TWIFO, no small part of that, so keep rating and reviewing it wherever you find this program. Of course, if your platform doesn't allow it, you can always rate and review in the app stores for our network app. A lot of people like to do that as well. And of course, if you need more content in your lives, and who can blame you, head on over to theoptionsinsider.com/pro. That'll get you two exclusive shows, access to the exclusive podcast feed, which will get you all the episodes we've done and recorded there, so you can see all the great pro Q&A sessions and options oddities and some extra special ones as well. I did a great episode over there with the folks at Harvard Business School talking about options. That went up to the pro feed as well. So all sorts of great content and pro exclusives over there, as well as, of course, live access to this, everything else we do throughout the week. And indeed, it's coming up. Yes, listeners, we're going to be giving away our October Pro Trading Crate. People keep asking us. You can't buy those. Those are exclusively for our pro members. So get in on the fun. Theoptionsinsider.com/pro is the place to go to learn more. And let's see who we're going to be learning more from this week. I am pleased to welcome into the CME Group and FTSE Russell hot seat our old friend, even though it hasn't been on the network in quite some time. Mr. Dan Collins, formerly the editor-in-chief over there at Futures Magazine. Mr. Collins, welcome back to TWIFO, sir, and welcome back to the network. It has been too long.
Yeah, it's good to be here. It's been a while.
It has been a while, and we have a lot of new listeners, as I mentioned at the top of the show, certainly since the last time you joined. I think the last time you joined us, Dan, it was the Futures Options Roundtable, so a completely different show. So it has been a while. It's been.
I thought I was going to be on with like 5 people.
Nope, just you in the hot seat today. So since it's been a while since you've joined us, and of course we have a legion of new listeners who probably missed your last appearance. Let's start there. Give our listeners a bit of an overview. I mentioned you were the editor-in-chief of Futures Mag, so you kind of dictated what futures content went out to the world for a long time. But give our listeners a bit of an overview of your background in the futures world, sir.
Yeah, well, I mean, to go way back, I worked on the floor of the Board of Trade and the Mercantile Exchange for the, starting in the 80s for the whole decade of the 90s, and which was just invaluable when I joined Futures in 2001. And I worked pretty much every editorial job there, from associate editor up to editor-in-chief. So it was a long time. And really, one of the things I'm proud of, because, and the name kind of, was confusing for some people. We were one of the first to cover options, and I expanded that quite a bit while I was there.
All right. Well, the right man for the job here as we keep on rolling into our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down everything lighting it up to the upside, a.k.a. the light side, and to the dark side over there at CME Group since our last show, pretty much. And we have another pretty skewed week, not quite as badly as we have seen in the past, listeners. Recently, we've had a hard time putting together a top or bottom 5 some weeks. This week, we're not quite that skewed, but still, Mr. Powell has spooked a lot of markets this week, so we are seeing a preponderance of red out there in the Movers and Shakers Report. You guys want to see it for yourselves, follow CME Group on Twitter. Follow us on Twitter. We tweet it out right before showtime, so you could see this for yourselves. Otherwise, the only way to get access to this is a pro-level tool, listeners, is good old bantix.com, BANTIX.com, which if you're listening to this show and you haven't gone and tried out the free trial yet, what are you doing? It's really great stuff. We kind of just scratched the surface of what they have to offer over here on the show. Check them out at bantix.com. All right, Mr. Dan, a lot going on this week. Where should we begin our journey this week? To the light side or to the dark side?
Let's start on the light side.
Look at you, you eternal optimist, you. All right. To the light side we go. It's the smaller side, so a little bit easier on the light side. Number 5 to the light side this week, listeners. We've got Class 3 milk, so dairy making it once again into our movers and shakers. Interesting. Up 3.4%. It was number 4 in the other direction last week, off nearly 3%. Number 4, back to the beans, soybean oil in particular this week, up 3.85%. Number 3, our old friend Nat Gas, a frequent offender these days. One of our 3 frequent offenders out there, of course, lumber, Bitcoin, and Nat Gas. Usually any week, if you guess those 3, you have a good chance of at least one of them making them into the movers and shakers every week. This week, we got Nat Gas at least, so one's down, up 5.23% this week, so a bit of a rally for Nat Gas. Number 2, back out to the ags, it's oats, up 7.04%. It was number 3 in the other direction last week, off 4.93%. And the number 1 light side mover this week, listeners, rough rice. How often do we say that? The number 1 mover in any direction is rough rice. But this week, that is the case, up 8.01%. It was number 5 in the other direction last week, off 2.38%. So getting all that back and then some. Rough rice, unfortunately, not a huge options player, but intriguing nonetheless. Now to the dark side we go, listeners. Number 5. And again, there is a lot of red on the screen this week. Number 5 to the dark side, the Nasdaq, the E-mini Nasdaq, off 3.26%. Rough week for equities, especially since Mr. Powell did his thing this week. He really kind of cut the legs out from a lot of stocks out there. Number 4, we've back to the metals. It is platinum, off 4.17%. Number 3, the old 3-month SOFR, kind of the replacement for the Eurodollar is out there, off 5.75%. Again, you got the Fed talking this week. It's not a surprise. We see some rates, though not as many rates as you might assume. Just a 2-month SOFR making into the movers and shakers this week. Number 2, we've got palladium. So back to the metals, off 7.23%. It was number 2 in the same direction last week, off 7.67%. So it's been a rough couple of weeks for palladium. And then number 1, one of our other frequent offenders. So we're 2 for 3 this week, listeners. Lumber, off 7.25%. It was number 1 in the same direction last week, off 10.77%. So it's been a rough couple of weeks for both palladium and for lumber. We have mentioned lumber, not really a huge option story, but maybe that will change now that CME has launched the smaller products out there. Mr. Dan, you haven't joined us on this show ever, so we will allow you to choose which product complex we go to first. Is one of our movers and shakers catching your fancy this week, or do you want to go somewhere else? Where should we start our show this week, sir?
A couple of things I want to say. I don't see a light, because I'm a futures guy, never a light side or a dark side. So, selling is just as good as buying. And it also kind of highlights the importance of options, because you don't want that much risk on most of these products that you're listed.
We are whipping and sawing this week. So do you have a preference? Energy, equities, ag? What's floating your boat, sir?
Yeah, I'd like to take a look at start with equities with the Fed activity, and I do have some thoughts on that.
All right, so then to the world of equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wonderful, this week, topsy-turvy world of equities. Of course, it has been for many months now, topsy-turvy out there. You guys know where to go to find news reports for yourselves. CMEgroup.com/TWIFO, TWIFO. Of course, that's the name of the show. Then once you're there, you're going to go into that asset class drop-down, listeners. Go down 4 slots, go past ags, crypto, and energy, all the way to equity indexes. We're going to hang out in the Russell 2000. I think we maybe might make a stop in the Nasdaq as well this week, because it is also on our movers and shakers this week. Before we dive into that, let me set the table from a vol perspective. You can't really talk equities without talking vol. And coming into the start of the show, RVX, so the VIX of the Russell 2000, it's at about 30.75, down about 1.15 points from where it was this time last week. Still north of 30, still frothy, but a little bit less so this week. VIX cash itself, 25.42, down about 1.5, almost 1.6 points on the week. So VIX cash getting a lot less frothy on the week. VVIX 79, the vol of vol. Pay attention to that, listeners. 79, that's down about 1.5 points. That's getting pretty low. If past is prologue, usually when we saw VVIX get down to about 75, it usually wouldn't hang out there for very long. It would usually bounce, and the vol of vol itself would start creeping back up. So be interesting to see how long we can hang out here at these relatively low levels for vol of vol itself. A vol Q, so the at-the-money vol of the Nasdaq 100, 31.14, down about 1.44 points from where it was this time last week. Puts that VIX to RVX, so the large cap to small cap vol spread, at about 5 1/3. That's almost a half a point, about 0.45 or so points wider than it was this time last week. And the VIX to vol Q, so the Nasdaq to S&P vol spread at about 5 3/4. It's about 0.15 wider than it was this time last week. All right, Dan. A lot of table setting, a lot going on this week out there. We've had some rallies recently. Then Mr. Powell came in and said, "Not so fast, kids," and he smacked everybody down to size. What was light up your tape in the world of equities this week, sir?
Well, what I think is just a reset that people have to do, because we've gone through a decade of just this very bullish, atmosphere where whenever they sold off, we thought it was going to come back. And there's one factor behind that, and that's been the relatively low interest rates forever. And that's ending. And I think everyone has to kind of do a reset when they look at equities, when they look, not every sell-off is necessarily a buying opportunity. And that, like you could say it was over the last decade. I know you've been looking at it closer, but that's a real key factor, I think.
Were you surprised at the aggressive nature of the response to the Fed this week? Earlier in the session, we were rallying, and then Powell came along and that seems like it was pretty much all zero. It seemed like people for a while in equities, Dan, I'd be curious if you agree with this. It seemed like they've been kind of whistling past the graveyard for a while, right? They're like, oh, the Fed, they're tightening, but you know what? We can still buy these stocks, and they're eventually going to stop tightening, and it's all going to be rally-ho. And they seem like they were already pricing in the fact that Powell was going to announce a little bit of slackening of the yoke this week. And when he didn't do that, that really seemed to spook a lot of people. So what were your thoughts on
a lot of that? That might have been begging more than actual analysis. Which sometimes works, but usually works in the other direction when the begging comes from J.P. Morgan. You recall a couple of cycles. From what I saw, most people expected it to continue, and there is starting to be some pushback. But the most analysis I'm saying is like it has to get to the level of the inflation, right? that the Fed funds rate.
It's funny. There's the old saying, right? Don't fight the Fed. And that's usually true. But it seems like this year people are kind of just throwing that by the wayside because they're buying stocks almost in spite of the Fed, right? They're like, oh, the Fed's tightening, but I'm still going to buy every dip I can. So that's always been a little bit head scratching to me this year. The complete lack of reticence to buy every dip out there in this market. And so far we're heading, looks like, for yet another dip out there. Let's head on out to... I mentioned the Nasdaq is one of our movers and shakers. Maybe we'll start out there this week. We don't get a chance to sink our teeth into the Nasdaq too often. Coming into the start of this segment, Nasdaq 10,801 off a whopping 786 handles, or 6.78% just from Monday's session, listeners. So obviously Powell turning things for the worse this week. If you go back to our end of our last show, we were only off about 3.25%. So obviously, this next leg of the sell-off post-Powell has been pretty dramatic out here in the NASDAQ. And you don't need me to tell you that. Just look at any of your favorite NASDAQ names, and chances are they are a wee bit lighter now than they were even at the beginning of this week. In terms of paper, how much paper does the E-mini NASDAQ options, how much do they do this week? About 130,000 contracts. So it's no slouch out there. I mean, it's no 3-month SOFR maybe, or the old euro dollars, but it's still doing some decent paper. And because it is an equity, 23% went up in the contract going out tomorrow. But we also see a little bit of bifurcation of the paper, which is refreshing because 25% of the paper, so actually more, going up in the D's contract that has about 43 days to go. So that's a refreshingly longer-term contract for us to sink our teeth into in an equity. We don't see that too often. What is the vol on that D's contract right now? Listeners, about a 31.10. It's up about half a point, so getting a little bit frothier. And one of the things people have been lamenting with this sell-off is the vol response has been somewhat muted. I think we're still seeing that again right now. Not exactly a banner week for vol. In fact, we're down on the week. So if you were looking for this vol pop post the Fed, you have not seen that. In fact, it's been the opposite. It's been acting very much like event risk in any equity. Once the event happens, regardless of the outcome, unless it's very surprising, you're going to see vol somewhat collapsing, and that's pretty much what we're seeing out there right now. Skew-wise, the puts last week, 6.4% bid. This week, 8.2% bid, so getting a little bit juicier on the puts. The calls, 5.1% cheap. This week, 7.3% cheap. The calls getting cheaper. Puts getting a little bit more bid. Again, given we are moving pretty aggressively to the downside, that's not entirely surprising. Usually, if you're gently moving down, you would see the opposite. You see the puts coming in, the calls getting bid. You see that skew rotate a bit, but because we are moving pretty aggressively, we are seeing the puts catching a bid, and that does make some sense. In terms of the most active contract out there this week, I said we're at about a 10,801 right now, listeners. It's the 10,500 puts in December, doing about 4,300 contracts this week. Trading pretty actively all week long with the exception of Monday. Not much going up on Monday, but about 1,300 to 1,500 going up pretty much every other day this week. Opening on Tuesday, closing on Wednesday. Interesting how that worked. And then 1,200 more going up today. So intriguing. We got about 2,200 contracts open on that track right now going into today's paper. So that could indeed be closing today. But intriguing stuff nonetheless. And then right behind that, we have, looks like also in D's, the D's 12,000 call. So interesting strike choice. About 2,600 of those going up. The big day for those is today. About half of them, 1,374 going up today. The rest kind of scattered throughout the week, opening and closing throughout the week. So 10,500 puts and the 12,000 calls in December are leading offenders out here in the NASDAQ. Also at the 13,000. So if 12,000 isn't optimistic enough for you, isn't far enough out of the money for you, listeners, We got the 13,000 calls also doing about 24, almost 2,500 contracts this week. The big day for those, about 8 to 900 each on Monday and Tuesday, opening and closing both of those days, opening on Monday, closing on Monday, opening on Tuesday. So intriguing stuff. I'm looking for any other interesting and or aberrant paper. You know what we're not seeing in the Nasdaq, listeners, that we see every day in the S&P, right, is the garbage put selling. I'm not seeing the people picking up the nickels in front of the steamroller, at least not for size out here in the Nasdaq. So that's a little bit intriguing. In terms of narrow dated action and stuff that's going out tomorrow, we have the 12,000 calls, doing about 2,000 contracts out there. Half of that on Tuesday, 1,100 on Tuesday, and about 700 on Monday. Not much the rest of the week. So intriguing. Opening on the 12,000 strike heading into tomorrow. So let's hope for their sake they were overwriting the heck out of those listeners. And since we're hanging out in the equities, let's take a quick sojourn over there into small cap land. Of course, go out into that drop down, listeners, and go into, I'll pop out of the Nasdaq and go into the E-mini Russell 2000. About 20,000 contracts on the tape right now for the Russell 2000. So decent week, not a blow the doors off kind of week, even though we are seeing some decent movement right now. The Russell 2000, 1790, off about 61 handles, or about 3.3%. So a far cry from that 2000 level, listeners. And in terms of action, about 30%, again, just like the NASDAQ. This is interesting, going up in the D's contract. So it's a longer dated paper, certainly for an equity. Going out 43 days, that's an eternity in an equity. So that's surprising. Both NASDAQ and the Russell 2000, the lion's share of their paper going up in the D's contract. D's vol right now in Russell 2000, 29.99, just a tick below 30, listeners. That's up about 2/3 of a point. So the D's vol actually ticking up where everything else has kind of been coming in the nearer portion of the curve, listeners. In terms of skew, the puts last week, 6.2% bid. This week, 6.8% bid. And the calls last week, 5.9% cheap. This week, 6.1% cheap. In terms of action, it's the 1,600 puts leading the way by a country mile, doing nearly 2,000 contracts, and nearly 10% of the paper is in this one trade. Almost all of this today. Someone putting up 1,646 of the D's 1,600 puts today in the RUT options. That is interesting. Now, we do have about 1,800 contracts open on that strike, almost 1,900. So it is possible they're just deciding to get the heck out of Dodge. Either they're long them and they're just think 1,600 is a bridge too far, or perhaps they are short them and they're getting a little bit spooked that we might hit that level by December. Either way, a ton of D's 1,600 puts going up out there in Russell 2000. Man, we never see that. That is kind of interesting. The longer term paper in both the NASDAQ and the Russell 2000 makes me wonder what game is afoot out here this week. Mr. Dan, we just kind of talked about Russell 2000. We just talked about NASDAQ. Anything else catching your eye in the world of equities, or perhaps you have something to add on those two? Have at it, sir.
Well, it just seems like you might be setting the parameters there with those numbers, with the put action, or at least the bottom parameters. But I want to go back when we were talking about the Fed. It's the interesting thing is when we stopped doing the taper back then, the markets really tried to kick the Fed around. They'd have little temper tantrums, and the Fed would react. So it's almost like Powell is kind of back in charge from that strange period where any sort of hint that they're getting tighter, creates this huge reaction. So I think those numbers are interesting, and I would like to know from you where do you think money's going to go? Because the people who are kind of fighting it really need to realize just how big that zero interest rate was part of the rally, and that's a world that's not here anymore.
Yeah, that point about where the money's going to go is an interesting one. Usually in the middle of the year and at the end of the year, we run our look back reports for the year, and we look at the cross asset correlation, right, of how well different asset classes are moving in relationship to each other. And right now, that's an interesting question. Where can you go with your money, right? Because it's the old adage, right? When it all hits the fan, correlation tends to go to 1. And we have been seeing that for a lot of this year, right? You thought you'd have maybe a safe haven in rates. Nope, sorry, those got annihilated. Maybe you want to go to metals, right? Typical flight to quality asset given everything else going on. Nope, sorry, underperformance in metals. Crypto, maybe crypto's supposed to be quote unquote not correlated, right? Depends on who you talk to. It really actually is very highly correlated. And yeah, crypto has been selling off all this year as well. So any of your traditional, even some of your newer, I wouldn't even call them safe havens, just diversification areas, all of them have been moving in lockstep, Dan. So yeah, it's a challenging environment. We've had a lot of guests coming on the network recently extolling the virtues of cash, the optionality, if you will, of cash. And there is a lot of optionality to cash if you think of it that way. You put your money in cash, and then you could pick your poison, right? You could pick your moments. Maybe you start nibbling in some equities when they get a little lower. Maybe you start nibbling in whatever it is. Could be fixed income or a metal. When assets start hitting levels that you find attractive, you can then jump right in. Obviously, you don't want to be in cash forever because inflation is eating into that a wee bit, but it is an intriguing asset right now, Dan. And, I'm hard-pressed to think of others that give you as many options, pun intended, as cash right now, Dan.
Yeah, well, I mean, and I was speaking with an investor, an old manager that I profiled about him and his family office. And, there was a little frustration because cash was something that people looked at not that long ago. And it's like now with inflation, maybe that, that avenue is closing a little bit. Commodities have always been, typically the inflation play. I mean, it has, but I don't know if it has performed as well as some people had hoped. And crypto just seems to be the modern day gold bug. Those of us who think the world is nearing a catastrophe is turning more to crypto than those who would turn to gold a few years ago. I don't know, and I don't know if that's how you're seeing it on the option side, but.
No, definitely. I think it used to be, I used to joke years ago on the network that the most hardcore of our listeners were definitely the gold bugs, right? If you did anything or said anything to besmirch gold, you would hear about it from them. And they got usurped for a while by other names. Equity, let's say the meme kids usurped them for a lot last year, but it definitely is the crypto folks who have taken the reins in terms of the most diehard proponents of their underlyings out there right now. Speaking of underlyings, let's keep on rolling with the show out of equities. Mr. Dan, what do you think we take a stop into energy next? What do you think?
All right. It's been interesting.
Yes, it certainly has. All right. To the world of energy, we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everyone. Welcome to the black and sticky world of energy. Yes, go into that drop down, pop out of equity indexes, go up one slot to energy. It is an alpha order list. Then we can hang out wherever we want in there. Obviously, nat gas is on our movers and shakers, but crude oil is also top of mind for a lot of people, as well as many other energy components. Mr. Dan, what is lighting up your tape in the world of energy these days?
I'm just curious about the spread between unleaded gasoline and crude oil. I mean, and this is more just as a consumer. It's like crude oil is at a level where, it would be, the unleaded gas price would be much lower. And I'm not quite sure why. I mean, I think the last time crude oil was at this price, you would see gas prices maybe in the high $2.90s, low $3 range for unleaded gas.
Are you a big watcher of that spread, sir? Aside from being a consumer, do you used to watch it a lot when you were over there at Futures Mag?
Well, the crack, yeah, I kind of occasionally, follow that.
Let's get on out here into some of the other products that are lighting up. Unfortunately, not a ton of options lighting it up on that spread, sir. We don't really bring it onto the show too often, but it is, you're right, an interesting relationship to keep an eye on, whether it's that or let's say gold, silver, a lot of different relationships that our listeners should keep in mind when they're looking at these products. Let's go out to our movers and shakers this week. Let's go back to nat gas. It is one of our frequent offenders, and it is on our list yet again at number 3 to the light side, up about 5.25% this week. And it's still pretty much up about 5.3% just since Monday's session. So pretty much all of that move has come this week. We're still a little bit shy of a 6 handle, listeners, about 598. But we're closing in on that 6 handle. So getting a little bit of that juice back in the nat gas that maybe some folks thought we had lost. In fact, we're seeing some 10 calls trading again this week. Spoiler. Before we get to that, listeners, how much paper is on the tape this week? A pretty active week. Nearly 450,000 contracts on the tape. So that's back to the numbers we know and love out there in nat gas land. And of that, nat gas, the D's contract doing about 40% of the paper this week. So we're going to hang our hat out there. Still has a little over 20 odd days to go for that contract. So a lot of meat on the bone left there. What is the vol right now in nat gas, listeners? If you're lamenting, let's say equity vol or some of the other products maybe you trade where the vol just isn't up to snuff, crypto vol continues to come in, allow me to present nat gas. Was at a triple digit. Now it has broken that again. It's about 97 and a quarter, down 3.5 points, but still was over triple digits not too long ago. And if you go a little bit farther out beyond the D's contract, it still is in the triple digits in most of those contracts all the way out through March of next year. It is triple digits in the vol. So if you're looking for a place with a little bit of vol, listeners, you could do worse than nat gas. Just be prepared. As some of our guests have said recently, it is easy to get your face ripped off. And if you're not familiar with nat gas, you don't trade it actively, probably better to watch this one from afar. But intriguing stuff nonetheless. Let's get on out to what was dominating the tape out here this week. Oh, before we even get into that, I said 97 and a quarter. Let's keep rolling with some of the other data here. Skew-wise, the 25 Delta Quick Skew listeners, 1.9% cheap were the puts last week, and they're about 0.8% cheap. So a little bit less cheap this week were the puts. The calls last week, 3.7% bid. This week, 3.9% bid. So not a huge skew move on the week, which is kind of interesting given the fact that we have seen a little bit of underlying pop out here this week. And speaking of pops, let's see what was popping from an options volume perspective. Yeah, it was the 4 even puts, listeners. I said we're at a 598 right now. The 4 even puts, nearly 2 handles out of the money, doing a heck of a lot of paper this week, nearly 20,000 contracts. The big day was Monday, 7,300 contracts going up on Monday. Most of that closing, so maybe some folks thought the sell-off in the near term had abated and they were getting the heck out of Dodge on the 4 puts. Then 3,400 on Tuesday, 3,400 again on Wednesday, 4,400 today. Opening throughout the rest of the week. Obviously, we don't know about today's paper, but there are about 22,000 contracts open on this strike, so it could easily be closing with today's paper as well. So 4 puts leading the dance. Then right behind it, we got the 7 calls also in December. So quite a strangle/risk reversal going on out there, listeners. 4 puts, 7 calls. 7 calls doing 17,500 contracts this week, just about 1,000 less than the 4 puts. They were more evenly spread out throughout the week. 4,900 today, 4,500 on Monday, 4,400 on Tuesday, 3,700 on Wednesday. Back and forth opening throughout the week, and obviously there's about 13,000 contracts open right now, so today's paper could be closing as well. 4 puts or 7 calls might be an interesting poll question. Which one would you rather own right now, listeners, if you had to buy one of those in nat gas in December? 22 days. Intriguing stuff. We're at about a 6, so obviously we are closer to the 7 calls, so maybe you would choose that, but I don't want to put words in your mouth. And right behind it, we have the 4 half puts. So if the 4 puts were maybe a little bit too out there for you, allow me to present the 4 half puts, doing about 17,000 contracts. The big day for those, also Monday, 6,500 contracts on Monday, 4,300 on Tuesday, about 4,000 on Wednesday, 2,000 today. Opening throughout the week on these. So that's kind of interesting. A lot of opening paper on the 4 half puts throughout the week. So a ton of paper just going up here in D's. Also 5 half puts doing about 11,000 contracts. The big day for those. Monday, about 4,700 contracts. So just a ton of puts going up here this week, listeners. If we go a little bit farther out, we can also see some other paper. 3 puts going up in March, 5,000 times this week. Looks like we have our friend doing that put strip again. This time it's the 3 half strike from April all the way to October. We've got 3 half puts going up in the range of 3,000 to 5,000 contracts at a clip. So once again, that time strip is trading out there. Dan, aside from your fear of it being ridiculously expensive to heat your home this winter with nat gas, aside from that, what else is catching your eye, if anything, sir, in the world of the ultra volatile nat gas, sir?
Yeah, I always would just recommend people stay away because some really good people I know blew up a couple of hedge funds. But I point out we're here in Chicago and it's about 70 degrees today, which usually is a big deal for natural gas when you're into November. Um, and I think what's usually most interesting is the spreads in natural gas at this time of year when you're moving, out of fall into heating season and getting through hurricane season. So I think there's usually a lot of dip in vol right now. But as you said earlier, the best plan on natural gas is usually to stay away. But this is what do you call kind of where they're building or the end of building season, and it usually reacts when you get. There's usually a reaction when you get this kind of unseasonable weather, right when they expect to start using it, and no one's using natural gas today.
Yeah, you're right.
Chicago.
You're right. Today would normally be a day where nat gas would be taking a hit. Instead, we are off to the races. But yeah, 70 degrees, almost 75. A nice day this time of year out here in Chi-Town land, listeners. Since we're hanging out in energy, it's not on our movers and shakers this week. It's actually right outside of it. But we do have WTI kind of holding firm at the 88 handle this week, up about 0.5% on the week. But what's intriguing about it is how much paper is going up out here this week. It's a pretty active week, listeners. Closing in on 600,000 contracts for WTI. Usually it's in the 4 to 450 range, kind of like what we're seeing in nat gas out there, but blowing through that this week. So intriguing stuff. And once again, of that nearly 600,000 contracts, 34.4% going up in the DEES contract. Everybody's all over DEES and all these products out here this week, listeners. So let's hang out in DEES really quickly. What is the vol out here, you might be wondering? It's about 45 1/3, off a little over a point, about 1.1 points. In terms of skew, we've got the puts last week, 0.4% bid, and this week the puts are 1.3% cheap. So a little bit of a swing there in the puts. In terms of calls, not a huge evolution there. We had the calls last week, 2.7% bid last week, 2.3% bid this week. So calls coming in a wee bit out there. Let's see what's driving all this paper out of here, though. It looks like it's the pars. Oh, you know what? As I say that, listeners, I'm betting it's another one of these ridiculously tight 1 point wide verticals. I may have been sucked in yet again, listeners. Let's see. And let's see. It's the 115s. The DEES is doing the most volume this week, percentage-wise, but it's the 115 calls in February that are actually the most actives. 50,000 of those. And yeah, you know what? It's another one of these 115, 114 verticals, listeners. It went up 25,000 by 20,000 times on Wednesday and 25,000 by 20,000 times again today. Looks like most of that is closing. It's like they're taking it off and putting it on in March. So they're rolling their yes, it's opening in March now. Jesus, 25,000 by 20,000 times. Whoever is doing this, I really want to talk to you. I want to hear, what is your use case of this? How did you hit upon this? And doing it on a ratio now, 25 by 20,000 times yesterday and 25 by 20,000 times again today. So there we go, listeners. I'm talking 100,000 contracts in each of these just to roll it from February to March. A very much love your broker type trade. Dan, this one just makes me laugh because it's so ridiculous. We've been talking about this for a little while. I have a hard time coming to grips with this spread. It just seems to me to be like a whole bunch of nonsense here. But we have someone is persisting in this. I'd love to get your thoughts as the multi-decade managing and chief editor over there at Futures Mag. Someone is putting on the 114, 115 call spread. They did it in February, pretty much 40 by 50,000 times, and now they are rolling that February 40 by 50,000 ratio 1 point wide vertical into March. Riddle me this, sir. What are they up to?
That's really curious. I mean, if you think it's moving that way, but you're keeping such a tight spread seems really peculiar. But I think, for a lot of people, and we talked to Phil Flynn about this a couple of years ago, crude oil has really moved into almost like what my gold, in a certain sense, could be, is people's favorite markets, kind of a play on the economy. It's now this spread, I'd have to know, what they're doing, whether it's, what business that person is in. Because that seems strange to me.
Yeah, strange to put it mildly out there. We've had brokers on there scratching their head. If you are the broker listening to this who's putting up these trades, I'd love to talk to you. We can keep it off the record. I just want to know, what is the impetus behind? What is the thought process behind this? Clearly, someone thinks they've hit on something here, and now they're rolling it many, many months ahead of time. What are we doing? What are we doing out here? Obviously, if you're the broker behind this, you're very happy because they are putting up 100,000 contracts at a clip to do almost literally nothing. So this is very much a love your broker. So you are a very happy person out here this week. We're coming up against it, Dan. Here, we've already only hit on 2 complexes, really, but they've been pretty in-depth looks here. We got time for maybe one more complex, sir. So what's lighting up your tape this week? Maybe ags, maybe something else, metals. What's on your radar this week, sir?
Why don't we look at eggs? I mean, like we said, everyone's been bemoaning inflation, and commodities are the inflation play.
All right, to the very dirty world of ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. And you know where to find this one, listeners. We're at the top of the drop down. It's pretty easy. So head on out there. I'm just trying to pull up. We have so many ags in the light side and a little bit on the dark side as well, listeners. Obviously, if you throw lumber in there. Rough rice, our top mover to the upside in the week, up 8%. Unfortunately, 701 contracts on the tape. It's actually a decent amount for rough rice. Rough rice hanging out at 1759 right now, up about 6.5% just on this week. It's the 18 calls doing a whopping 150 contracts that are the big dog out there in rough rice. By the way, what is your vol in rough rice? 11.5, up about 1.25 points. So you don't really go to your rough rice for vol, but a little bit more action out there. We know the deal with oats at number 2, also not a huge options player. It could effectively do 8 contracts in a week. So I think we're going to hang out at the number 4 light side mover this week, which is soybean oil. But before I get there, Dan, like I said, you were covering the futures markets for many years out there. Ags and commodities in general, like you said, traditionally a decent inflation play. Obviously, this year, the whole Ukraine fiasco has thrown a bit of a wrench in those works. But what are your thoughts on what you've been seeing out there in the ag complex this year, sir?
Well, no, that's really interesting because if people hadn't realized that Ukraine had become one of the largest wheat producers and just, grain producers in Europe. So that, that's kind of another kind of a bullish element to it besides the inflation play. I think it's something to look at going into this. I mean, we're at a point where I don't know, if they're looking for escalation, but the travel is tough there, and if they're going, will this carry on to the next growing season is a big question.
Yeah, obviously, if the fields are bombed and mined and just generally destroyed, it's kind of hard to plant in them, right? So that's a big question, how much lasting impact this will have. Of course, there were rumblings this week that we were going to see Russia pull out of their grain deal. They ended up kind of the last minute deciding, well, okay, I guess we'll go along with it to prevent global famine. Nice folks that they are. So we also have Class 3 milk at number 5. Talked about them recently on the show as well, listeners. Dairy doing more paper, but still only about 5,000 contracts. And of course, lumber, the dark side number 1 mover off 7.25%. So our list is dominated by ags and of course softs and everything else this week. But in terms of volumes, lumber still can't really do any options paper. It's starting to get there with the smaller contracts, but not quite yet. So to the soybean oil we go, number 4 on our movers and shakers this week, to the light side, up 3.85%. Doing about 60,000 contracts right now. So no light week here for soybean oil. Where is soybean oil trading right now? You might be asking. It's about a 75.30 in that front contract, up about 3.5 points or about 4.88% on the week. Obviously, if you go back to our show last week, it's up a little bit less, about 3.85%. And of that 60,000 contracts, 61% is going up once again in Dees. That contract has about 22 days to go, so we're going to hang out there. If you're looking for a little equity reminiscent vol, if you want to put it that way, then soybean oil's got you covered. The vol is right about a 32, 31.91, so pretty much right in line with what we're seeing with RVX and small caps out there right now, and a little bit more than, let's say, a VIX. So that's up about 3.1 points, so a nice little vol pop here for soybean oil. In terms of skew, not a heck of a lot going on. Last week, the puts were 0.2% cheap. This week, a whopping 0.3%. So not a huge move there. The calls last week, 2.1% bid, and the calls this week, about 0.4% bid. And in terms of the most active contract, like I said, we have about 60,000 contracts on the tape. The big dog, such as it is the Dees 70 puts, 7-0. Remember, I said we're at about a 75.25 right now in that front future, listeners. So these are about a little over 5 point out of the money puts, doing about 3,728 contracts. The big day, almost all of that going up on Tuesday, 2,200 on Tuesday, 800 and change going up today. The rest scattered throughout the week. It's been opening throughout most of the week, it seems like. Obviously, today's paper, we don't know, but there's about 4,400 contracts open, so there's a good chance it could be closing. And then right behind it, we also see the 73 puts doing 3,410 contracts, kind of evenly split between yesterday and today. Today doing 1,734, yesterday 1,519. Slightly opening yesterday. Let's see, today's paper actually, there's only 1,200 contracts open on the strike, so the 1,734 going up today, clearly opening. So we got some opening on these 73 puts, which again are a little bit closer to at the money puts. And then right in between those two, we have the 72 puts doing about 3,300 contracts. Once again, the big day is today. 1,001 contracts going up today in the 72 puts. Actually, I take it back. Even more paper going up on Monday. Nearly 1,700 contracts. It's like opening throughout the week, and then today's could additionally be opening, or could be a bit of a roll going up out there as well. So pretty much a put strip this week in soybean oil, listeners. 70 puts, 73 puts, and then 72 puts, all doing somewhere between 3,300 and 3,700 contracts this week. Not to be outdone, there were some calls. The 75 calls doing about 3,500 contracts, so they actually slot in there right at number 3 this week. The big day for them actually Monday, 1,500 contracts going up on Monday. Most of that closing, and we have about 1,100 going up today. There's about nearly 5,000 contracts still open on this strike, so it is possible that we are seeing some more closing paper going up on those 75s. But again, that is the at-the-money strike, so could be a lot of just back and forth trading going up out there as well. Let's look really quickly to see if we see any other interesting and or aberrant paper. No, it seems like it's mostly 75s. 75s going up in Jan of next year, 2,300 times. 75 calls going up in July of next year, 700 times. 75 seems to be the strike du jour out there in the call side, at least, for soybean oil this week. And we're kind of coming up against this. Let's get into a little bit of a quick futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the Futures Options Feedback segment, the portion of the show where you folks take the reins, your questions, your comments. Sometimes we turn the spotlight back on you with our own questions of the week. But before we do all that, Dan, I know you have some additional thoughts about the impact of all the madness going on in Ukraine on some of the spreads you keep an eye on out there in the ag complex, sir.
Yeah, I won't want to call myself an expert, but I've seen that one of the biggest moves in the soybean, the crush spread, happened, in the 80s when China went from just balloon their capacity at crushing, and all of a sudden they weren't buying any bean oil or meal, and just were buying the raw soybeans. But with things like crushing capacity and in a war environment where things are getting blown up, I really take a look, if you're an active trader in these markets, at that capacity in Ukraine and Russia, because they're big, a large producer, and that can really affect that spread if all of a sudden, 30-40% of that their crushing capacity is not available.
Great point. With a lot of these markets, listeners, it all comes down to China and what impact they're having on whether it's the metals, whether it's the ag, so many different markets. The ebb and flow of Chinese demand and Chinese capacity drives a lot of what's going on out there, and soybean oil, no different. Really quickly, let's pay off some of our questions of the week. We've been very equity heavy the last couple of weeks on our polls. And previously, we were asking you about recessions and all sorts of other things. Which commodities and other areas would you want to allocate towards for the rest of the year? Our last couple of weeks has been mostly focused on equities, I think for obvious reasons, given how much action we're seeing out there, both with the Fed and with earnings season. Last week, we asked you folks, since the start of the pandemic, every earnings season has only delivered about 85% of the movement that was priced into their straddles. What does that mean? That means if you took all the straddles at the start of earnings season, listeners, and you added them all up, and you looked at how much movement they were pricing in totality and versus how much was delivered, it's about 85%, so a little bit of underperformance. They're not delivering as much movement as was expected at the start of the season. And so we thought we would ask you, what are you expecting for this earnings season? So far, it's been a bit of a banger, and our audience, weirdly enough, was kind of tied. We gave you three choices, 85 to 90%, so somewhere about the same amount of movement, north of 100%, so an action-packed outperformance season, or a below 80%, somewhat boring season. And we had a weird tie, 36.8% each. Don't see that too often, that degree of specific exact ties, both for action-packed, so north of 100%, as well as 85 to 90%, about the same. Pretty boring coming in at number 2/3. At about 26.3%, saying below 80%. This week, we also have a bit of an interesting equity-focused poll. I'll get Dan's thoughts on this, then we'll get the heck out of here for this week, listeners. This week, we're asking you folks, as you mentioned at the top of the show, a lot of equities have just taken a drubbing this year and again over the last couple of weeks. Two of the big ones that have taken a bit of a pounding here in the early part of earnings season due to bad reports are Meta/Facebook and Amazon. Both of them, when we posted this, were trading around $100. They're trading around $90 now, so you may have to re-rack this poll at a newer buy-in level. But we gave you just a fun, very straightforward question this week. Which one would you rather buy? Gun to your head at this level, or is it neither? Would you rather vote and rather acquire neither? Mr. Dan, kind of a fun question of the week this week, outside of the realm of all things futures options. If you have a vote, Amazon or Facebook or neither, have at it. And then B, more importantly, what do you think our audience is voting for?
I would say Amazon, and I don't know if I have to. I'm doing some work at Amazon, so I don't know if I have to do a disclaimer.
Disclaim. You're moving the markets out there in Amazon. You think our audience is voting for the Amazon too?
I would stay as far away from any social media site as possible. There's regulation coming its way, especially as controversial as Facebook and some of the things that's going on and that's happening. People will always order things,
So you think our audience is voting for Amazon or for not? What do you think our audience is voting for?
I would think Amazon. I would think and maybe hope that everyone's a little bit sour on social media.
Look at you. You've been away for years, and you're still got your finger on the pulse of our audience, sir. 69% choosing Amazon right now. 17.9% going the Facebook or Meta route. And 13.1% said they didn't want to touch either. This week, that's been the right play because both of them are down about close to 10% just on the week. So a rough time. At Options is the place to go on Twitter, listeners, to make your voice heard. All right, that music means we've come to the end of another sojourn through the world of futures options. Dan, it was a pleasure having you back on the network, holding down the hot seat this week. How did it go? Did you have fun?
I had fun. It's been a while, so next time I'll be a little bit more prepared on each market, but it was fun.
Shaking off the cobwebs, sir. And in the meantime, if you got anything you're working on, or maybe something you want folks to check out, or maybe you want them to just come check out what you're up to these days, where can they go? What can they do to keep up with all things Dan Collins, sir?
I'm contributing to Crane Currency, which is the newsletter that Crane's putting out on aimed at family offices. I got a profile a couple of weeks ago of a very famous family office, a famous CTA, Salem Abraham, old friend from way back. They may want to check that out. I have a little intriguing tease. Anyone who saw a series of articles about the TPO, which is now called Quant Cycles, we'll probably be working on some more articles, even option-related articles with that. So that's a little tease.
There you go. All right. And if they want to reach out to you directly on any social media, where should they go? What should they do, Dan?
They can find me on my email, dancollins222@gmail.com. You can see my work. Not a lot of new stuff up there at Dan Collins Works, which is more of a portfolio site, but I've been dabbling in some sports writing as well as some of the stuff I'm doing with Cranes. So I'll get some of those stories up there too if someone wants to check it out.
There you go. DanCollinsWorks.com is the place to keep up on his latest. Look for his byline coming soon to all sorts of publications and outlets around the space these days, listeners. And of course, you know where to go to keep an eye on and track all your favorite futures options markets. CMEgroup.com/TWIFO, TWIFO is the place to go to kick the tires and light the fires on those reports. And of course, given the action this week, you probably want to keep an eye on it. You want to see what's going on with all things small caps? You know where to go. FTSE Russell, FTSE Russell.com is the place to go. All the latest data, correlations, volatility, impact of COVID and everything else going on small caps. How are the large caps versus small caps? How are they stacking up against some of the other indices out there, and a whole bunch more. Given the action we're seeing out there in small caps, you definitely want to check it out. Give them a follow on Twitter while you're at it as well, at FTSE Russell, FTSE Russell, all one word. That's going to do it for us on the network this week, listeners. Back again tomorrow, noon Central, 1 p.m. Eastern for Vol Views. And then after that, for all of our pro folks, 2 p.m. Central, 3 p.m. Eastern for Options Oddities. Then back again next week with a whole slew of new content all the way through to next Thursday and another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/CME. FTSE.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.